So funny I can't find all the other stuff. At least we got fire and money. Okay, just a few minutes. One minute. 1 minute will start for CPI. All right, good morning, everybody. How are you? All right, welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Now, why would we do that? Well, because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Ni hao, my name is Wayne and I salute you. We got CPI, so let's move on. Let's go. Yeah. A couple of things that you're going to need in your life to be a success. Well, at least two of them. As success as a trader, you need good execution through straight through processing. An ECN offers STP, straight through processing. You click the button, they put your trade into the interbanking system through their liquidity partners. Most brokers don't do that. Most brokers make money when you lose money. So you don't want that. The second thing is you want a good platform so that you can do your research and make informed trading and investing decisions. So you got expertise as well as execution. You got a chance, my friend. Now, CPI is coming out, so we're going to get the vol. Okay, there's going to be some vol around that. Okay, actually, you know what? We can do a deep dive in here. So with this, we can go to scalping. Okay, here we are. Just a few seconds away. Greater than expected. Sorry, less than expected looks like dollar weakness. Greater than expected looks like dollar strength. So we can drive into that if you want. If you pick, looks like euro dollar in that scenario has a scalp. Okay, so we can watch this. Okay, hang on. And I got to bring some other page up. Cool, let's go.
Ten seconds.
10 seconds, baby.
Two spot 4%, 2 spot 4%, higher than forecast, 2 spot 3%, CPI month on month, 0 spot 2%, 0 spot 2%.
There you go. Greater than expected. So you go to greater than expected. And we have a 100% chance of a 2-hour downtrend. Now, that doesn't mean just sell. What it means is in the past, that has been bad. Okay, and bad means dollar strength. So it just means April 10th created a downward and 2 hours later closed lower. February 13th, downward move, closed lower. January 11th, downward move, closed lower. Remember, closed lower 2 hours later. Okay, so it's a scalp. Downward move, close lower 2 hours later. October 12th, okay, red candle, closed lower. Oh my Lord. So now we could take a look. Okay, and there, oh, that's pound. Same, only different. Where's my euro? Okay. And we look at the 15-minute candles, what we want to look at. Okay. And all over the place. Okay, which is not abnormal. Where'd my mouse go? Okay, not abnormal. Okay, so that's what we're looking at. Now, remember, you still have to do technical analysis. Look, like we drop down into targets and stuff like that. Like this still is there. And you don't see inside this move the amount of volatility that occurred in the first candle. But remember, when scalping, you usually don't need to be in the first move. Okay? So we're testing all kinds of stuff. So if inflation is higher than expected, then it's hard for the Fed to cut interest rates. But 2.4 ain't bad, though. Like, don't cry. 2.4 is actually a pretty good number, but it is higher than expected. Okay? But notice, like, we dropped into a target. So if you were trading this, let's go out on a 4-hour. if you were trading this at the beginning of the month, so we're now in the 10th, right? So let's do it this way. If you're swing trading, okay, you know that this, oops, let's do this in a different color. Let's do ugly orange. Okay. If you are a seller up here at this triple top, okay, if you know technical analysis, it tells you that this is where you exit for profit. That's that. If you are a swing trader, you completed mission on that news. You probably hit your target and you're out. And you're like, Wayne, it didn't hit target. Yes, it did. You're like, no, it didn't. Yes, it did. No, it didn't. Yes, it did. You're like, no, Wayne, look at this. It was supposed to hit here, but it hit here. But you have to cover your spread, bro. So people move it above to cover the spread. Because if you want it to hit here, it has to go low. But if that's your target, you got to put it above to cover the spread. And it did hit it. So with spread, everybody did touch. So this could be massive profit taking. The other way to look at it, okay, don't get caught in the vol. Don't get caught in the vol. Let's do it this way. If you wanted truly to be a bear in the future, okay, then this is your sell zone in here. Okay, so you have the down, 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 profit taking, up, up, and a new down, down, down. I don't know if that's true. I don't know what the future is. I don't know what the future is, but that's very logical based on all the previous CPIs that have come out in the last couple of years in which, in which the inflation rate was higher than expected. That's all we know. That's all we know. It actually happened in those scenarios, meaning if inflation was higher than expected 100% of the time in the past. Past performance does not predict future results, but we do know it to be true. And so one might assume, that pattern. And the pattern is it drops. 2 hours later, it's lower than before. So you could be the person that sells it high and then takes a walk, knowing that the distance between, how should I do this? We know because we just looked, somewhere up here is the 4 hour 21. Okay, we know this is a pivot and we know this is a pivot. So sort of that cluster of stuff, right? That whole zone. As they say in Italy, it's a salzone. Okay, and so your sell orders are there. What an amateur does is sell when there's a giant red candle. We know that that's not correct. Okay, so even if you were doing this on a 15-minute candle, what is correct? So I'm assuming, oops, let me put that back. Okay, I'm assuming that, oops, there we go. I'm assuming that there's vol inside this candle, meaning if you were trading a 5-minute candle, or 5-minute candles instead of 15, it would have been like candle way down, and then maybe a way up, and then, well, that wouldn't have worked. How about this? A big drop, a big rise, and then a close lower as one big red candle. But even then, what do? You want to sell pullbacks. And so you're constantly measuring 382, 50%, 618. And you want to sell in there. I'm assuming it went higher, but nonetheless. You always sell inside the wicks. Okay? You always sell the pullbacks. Like here's a classic one. There was probably 2 moves. I'm assuming there was one inside this 15-minute candle, which means a 1-minute chart. And then you see that it came back and did about a 382 50%, which is another opportunity for a scalp. And then there's this sort of the swing trade. It's the same pattern. Okay. It's the same pattern. On a 1 minute chart, this is what you traded. On a 5 minute chart, this is what you traded. On an hourly chart, this is what you traded. It's the same pattern over and over and over. Fractal geometry. So once you understand that, you have your first scalp, okay? You have a second scalp, and you have a third scalp. That's pretty typical, okay? So once you understand the pattern and how to trade it, and I've been teaching it for 20 years, so I'm just assuming you've seen it 100 million times. But again, like that is your swing. So inside there's probably a 1 minute, right? A 5 minute, 15 minute, all the same pattern, all the same trade. This one is different. It never pulled back beyond the 1 or the 5. So again, somewhere in here, I'm assuming almost always you get a big red candle, pull back, you got to sell it. You got to be hot to go, HOTTOGO. And then there's a mini second chance. A mini one, a little mini, maybe a 382, maybe a 21.4, and then it's gone. Well, dude. Okay. Yeah. So anyways, you see how it's nice to have that type of intel? That's how the TRADARS do. Cool, right? And there you go. There's your follow one. And we've seen that historically. Doesn't mean it's going to happen, but it looks more, well, yeah. But do you think it's helpful where you say, no matter what happens, there's a 100% chance I don't buy this? Do you see how powerful that is? Oops, come on, I'm having one of those days. Just trying to get this page out of the way. You see how powerful that is? Like just to know, at least to know what not to do. What do you think, guys? It's helpful, yes, to know what not to do. And then the rest is an opportunity, but you got to be aware of the threat first. So you're like, no matter what happens, now that it came out greater expected, I'm not going to buy it. Because it's in the last couple of years, in that scenario, it's never gone up. So if it shows green candles, I'm not buying it. I'm not chasing green candles. Don't go chasing green candles. Please stick to the fundamental quantitative data that you're used to. Oh man, just like TLC. I know that you'll have it your way or nothing at all. Anyways. Bravo, bravissimo. Now, of course, the big challenge, the big threat to bears. Okay, the opportunity was to sell high off the 4H like I just showed you. Okay. But the threat to bears now is that bottom, the one I've already talked about. That is legitimately a bottom which we projected 10 days ago. Shut the back door. That is our assumed low. So it's real. So there's your threat. And everybody else in the middle is just getting crushed. So Counter trend traders, they're going to buy it low because they're going to buy it off that pivot. And they know that because it's the 10th, not the 15th, that they can try to counter trend. Although I'd say it might be a little risky to do off news, but whatever. It's risky to me. Maybe it's not risky to somebody else. Okay? And so you got the bulls down here, which are counter trend traders. They're not really bulls. They're just counter trend. And then you have trend traders that sell it high. What about everybody that is in the middle? Well, you can say monkey in the middle, but if let's do it this way. If you have bulls down here, let's say, and they're not really bulls in my opinion, but whatever, and you have bears up here, who's trading in the middle? I accept two answers to this one. Who's in the middle? Good. I got both answers. Okay? Pigs. And what happens to pigs? Pigs get slaughtered. Okay? What about bats? What is a bat? A broke-ass trader. Okay? Yeah. So bears sell high, bulls buy low. Yeah. And everybody else doesn't know what the heck is going on. Well, you did. I walked you through it today. Traders is pretty cool, man. Now, just a heads up to everybody. For all members of traders.com, okay, all members of traders.com have access to this webinar, Trading Crypto with Brian Bray. Okay, that's today at 11:30. Jessica's doing a session with the news trading team specifically. So not all members have access to this. But pro members do, and news trading team do. Okay? So, half the community. And then today, everybody has access to swing trading with me. Now, I don't have a cool thumbnail, so I'm going to have to maybe spend some time with that. Okay? And then tomorrow, I'll be over at FX Street. Cool. So anyways, busy schedule. Well, I don't trade stock individually, Sky Killer. I trade indices. Okay, so that's probably, I don't know. That's probably closer to a no than a yes. But as far as technicals, that's possible. Okay, yeah, so for technicals, that's very possible because we could cover these stocks. And we could talk about it technically. So like I'm going to go in here and look what I just found, everybody. ADA USD, BTC USD, ETH USD, LTC USD, SOL USD, XRP USD. Oh my God. There you go. So we doubled the crypto. Compliments of the firm. We got all of this from voting. Brian asked for Curve. We couldn't do Curve. Couldn't get CRV, buddy. But oh my God. So we got double the crypto coverage that the community asked for. We did a vote, and I was able to do that for you. Thank you for voting, and thank you for the feedback. Also, from our Australian brothers and sisters, okay, they asked for ASX, so we got that for you. You're welcome. Compliments of the firm. But see, so Richard's going, what about like going through the PE ratios and stuff like that? Like, no, see, that's the thing. I don't want to cover that. It's not what I do personally. So I'm a portfolio construction guy. Okay. Not a stock picker. Yeah. Cool. So anyways, so congratulations, everybody. We got even more, and you guys built it. So thank you very much for that. I want to turn off some of these and see if we can get some congruency here. Okay. So here we are looking at the stock market again. AMD, okay. Okay, this exhibits strength, but that's a threat. Strength, but that's a threat. Non-directional, pass. Non-directional, pass. Intel, strength and opportunity. So this one would be good if you're going to trade Intel today. Chevron, strength, but a threat, but probably setting up pretty soon for an opportunity. So I'd pull this one up if you're going to trade some energy stocks. Okay, Tesla. No. No direction yet. And Broadcom. Yeah, a little bit of a gap. Could be a rabbit. So anyways, let's do commodities. And since I've really narrowed down what we're looking at, because remember, I turned off half the patterns, there's only one move for gold, and it's down. Okay, as far as the pattern. Yeah. Neat, right? Okay. Now, if you're like, well, I want to see other opportunities, you can turn them on and off as you see fit. Okay, Fibonacci is going to get you like butterflies and Gartley's, which are like reversal patterns, for example. So you can turn some of those on and see you get a lot more. Is that what you want, though? Yeah, maybe you do. So if you were thinking like, okay, maybe gold is going to reverse soon and head back up, okay, then this might be useful. Okay, Brent, this is exhibiting bullishness, but it's not a sell. This is not a sell. It's a threat to bulls. There are no bears. What kind of bear would sell an up channel? None. None. Bears don't sell up channels. Bears don't sell higher lows. Ever. But Wayne has got an arrow. Yeah, dude, come on. Seriously. Little gray matter needs to be put to this. This is an up channel. It even says it in the English language. So an up channel is going to go like this forever. So then you're like, well, Wayne, why does it have a red arrow and a red box? Because if it breaks, okay, that's why I call it a threat. If it breaks, it could lead to a change in direction. It's just a threat. But like, no bears sell. All we know is it went a little too low, and you should be warned of a possible break. And the possible break is bulls exiting. And then a bear would sell, once you got the lower low, a bear's going to come in and sell a lower high. And so it's a threat to your bullish move. And notice what happened since. Yeah, it went back up. I know, right? Why? Because it's an up channel, bro. So you have to understand how to trade. You can't look at this like a signal service and say, well, I don't want to know how to trade patterns. I don't want to know how to do price action. I don't want to understand fundamentals. I just want to pay $100 a month and get rich. Okay? First of all, I don't think you're on the clue train. Okay? Yeah, I don't think you're on the clue train. Yeah. You're not on the clue train. Wayne, I don't want to do any work. I don't want to pay any money, but I do want to get rich. Interesting. Okay, what did the philosopher Flavor Flav say? Yo, Chuck, he must be on the pipe, right? Hey, man, the 90s were awesome. Oh, we had such good music. Yeah, 90s music was great. All right, so anyways, so this one did drop. Okay, a threat to a rising wedge. Okay, so this is good because it was bullish. It did produce the downward move. So help me predict the future. You ready? I'm going to predict the future. You ready? Cool. Well, Wayne, it doesn't say that on this. Well, this is why you need to understand how to trade. So that's why traders.com offers more than just like the pattern. But you have the flashcard so you can study these things. I will put together a training course. I'm here every day. We have performance coaching 2 or 3 times a day. Like, you can master this, but none of this is designed for you to turn your brain off, put it in cruise control, and get rich. Okay? So I talked to one of my hedge fund buddies last night, and he was talking about how he spends hours and hours and hours and hours planning one trade, going through every scenario, every aspect, everything, including pivot points. He was like, hey man, you taught me pivot points. And he's like, I use them all the time and it works. But his trades are well thought out. Like, no joke. He meant it. He spends probably 6-7 hours putting together a trade. Cool, right? Man, YouTube's been giving all kinds of errors today. So it's weird. It says there's in one spot it says there's no viewers, and then other spots it says there are viewers. I wonder if I'm just talking to myself. Am I all by myself? I hope not. Okay. Richard said, yeah. Yeah, you guys are here? Okay, cool. So I can't look at my streaming software, but I can look at the YouTube video. All right. Cool. And by the way, he uses traders, right? He uses traders.com as part of his analysis. He's a Forex trader, but he doesn't do spot Forex like we do. But he'll look at, like, he'll pull up a chart and look at pivot points, monthly pivot points, weekly pivot points, all that kind of stuff, just like we do. Uses moving averages just like we do. Uses price action just like we do. The only thing is it's multi-millions of dollars. And not in the spot market, so there's a lot of options going on. But if you don't know how to trade, it doesn't matter how simple or complicated your trade is. If you don't understand just the basics of, like, trading, so like something like this. If you don't understand that a channel up is bullish in general, then you don't have a chance. Like, you're like, well, Wayne, it's got a red arrow down, so I sold it. Like, you don't have a chance, bro. Not even close. Everybody's going to run you over. But the thing is, I can fix that. I can fix you, right? Right? I can fix you. So you will have a chance, right? That kind of thing. So anyways, very cool. Very cool. Let's look at the stock indices around the world. Remember, so we got our Fibonacci on, and we have our basically that we're looking at two things here. So like Nikkei is a sell, and you had an opportunity about 15 minutes ago, and you already missed it. Well, whatever, bro. You missed it. Okay. Cool, fine. So that's a trend, but these types of patterns are reversals to trends, which are interesting. Not always reversals, but very often. So, do you know how to trade this Gartley? Check this out. It's in the flashcards. I think I even have them. Yeah, it's in the flashcards. Oh, it might even actually be on. Okay, yeah, so this is the opposite. All right, cool. Here it is. ExxonMobil 15-minute chart butterfly emerging. Okay, fine, good. Here's something different. It's a different asset, and it's the opposite. And there's down arrows and up arrows. The way I've taught you in the past, if you talk to like David Pegler or Peter Ward, he was around there, even Brian Bray, I think, because they were members even before Jessica became part as a member and later as a team member. They're back 15 years ago is what I'm talking about, 10 to 15 years ago. We describe this as fib wars, where we see where bulls are buying and bears are selling. Okay, we call them Fibonacci wars. In this case, there's bats and butterflies and various forms of Gartleys, but they're all just fib wars. So there's a down arrow and an up. How do you trade this? Ashish is like a painful and expensive lesson. Oh, we've all been there. Believe you me, we have all been there. Okay? Yeah. And we've all been there. Like, I don't care how big you are, whether you're making millions of dollars a year or even millions of dollars on a trade. Everyone's gone through that process. And it's really cool when you talk to other people and, you know, they're at that level and they're like, yeah, Wayne, I do use your pivot points. You're like, yeah, cool. Well, I know they work. And they're like, yeah, I know they work. Okay. But anyways, let's go back to this. What are we doing here? Is this a buying opportunity or a selling opportunity? Yes, that is Metallica. Good call. Master! Master! Master of the right bone. Da 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 da. Da 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 da. Da 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 da. Master! Master! Okay. Go back to what I just told you. All right. Another trick question. This is where bulls and bears are battling out. Both bulls and bears are going to sell or buy. Cool. So let me put it this way. Bears are going to sell at C. Bulls are going to buy at D. Where's this likely probabilistically going to be? Who's going to win? Migo Mash is like 127. Sky Killer says we don't know. Well, you know what you do know. You do know. And I'm going to draw it for you. Of course, we don't know the future, but you should know the pattern. Up, 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 down, down, up, down. You ready? Up, down. Oh! Ooh! Yeah, Bubba. Revelation? Rev. I'll just call you Rev. Anybody disagree? Okay, and it's just saying there's likely to be a breakout to the downside. Okay. Well, but what it's saying is it doesn't know what you are. Remember, it's agnostic to trend. If you're a bear, you can sell C. Why not? And you'll get a lower low. The thing is, you should know to take profit. Let's delete this whole thing. Can you sell at C? Yeah. Where should you take profit? The lower low. Okay. If you're a bull, can you buy it at 19,156? Yeah. It'll probably go up, and it might go all the way up. We don't know. This is a Gartley forming. It hasn't happened yet. The problem with quote unquote a signal service is if it already happened, you've already missed it. So this is forming, but could it make a higher high? Dude, it could do anything it wants. Okay? It could do anything it wants. But what's likely? So I had it as a 127, but look, what is the most likely scenario here? If you bought it at D, is it going to go higher than this? Probably not, huh? Why? D is a lower low. I don't like lower lows. What kind of knucklehead buys a lower low? Someone that is going to bail on the scalp. They're going to bail, dude. They don't have the conviction. So it's going to come up here, and then what? Somewhere around there, we're going to take it down. You see the logic? What kind of knucklehead buys a lower low? A luhu sahur. A nincowpoop, right? A gullible. So anyways. So you have to think, what's the primary move? See, this is a whole different logic. When you think this way, it's going to change the way you behave. You need to say bear. But I wouldn't say it until we got the lower low. So you could sell the lower high. Can bears sell lower highs? Yes or no? Can bears sell a lower high at C? Okay. So could that person at C contemplate maybe a D opportunity? Morning, Richard. Thank you. You too. Hope everything's okay in the FL. Yeah, so you would contemplate if you're a bear. Okay, but you know it's not going to do that one move because we got to get all the bulls out. Okay, and then as somebody said, who said it? Grumpy Cat said it. What's happening is this complicated pattern is suggesting the formation of a new down channel. And that's what you're trying to put together. Okay, and this all starts when you have, okay, is this a Gartley pattern? No. Is this a Gartley pattern? No. Is the lower high relevant to you? Is it relevant to you if you were already fundamentally a bear on this asset? That it failed to make a higher high. Is that technically important to you? Yes or no? You're fundamentally a bear. You're thinking about selling this. And traders.com alerts you because you can't watch 7,500 charts at the same time. So this one alerts you and says, hey, Juliet. This made a lower high. Juliet goes, oh, cool. Well, this could be an opportunity, and there may be one in the future. Okay? Bears don't sell higher highs, but they sell lower highs. And that's a lower high. So now you can start thinking forward. Okay? And like, ooh, I wonder if something like this will start to develop. A primary sloping resistance line. And that gives you what? All kinds of opportunities potentially in the future. Sell, sell, sell. Are you guys loving this? Is anyone having an aha moment? Good. Cool. So that just happened to be the DAX. Yeah. Okay, here we are on the S&P 500. Does that mean sell? No. Let's take a look. Does that mean sell? No. Why? What is already the assumption? The assumption is you buy dips. You buy on the primary line. Okay? This is the assumption. If you don't know that, you're not going to make it. Okay? Well, RSI is a consequence of the candles, and I'm trading the candles, but whatever, it's all the same, right? Right? It's all the same. Okay, so that's the assumption. So this pattern, this asset, in this case the S&P 500, is exhibiting strength. And it's going to go up forever until it doesn't. So this pattern is just like, oh, be careful. If it does this, then it's a warning. And then you can start looking for Gartleys. You can start looking for double tops. You can start looking for lower highs. You can start looking for Fibonacci retracements. You could analyze whether there's key pivot points up here. You can see if there's a key change in fundamentals. But the thing is, you're not blind. But that is definitely not a sell. Okay. Okay. Can I incorporate the hammock into patterns? Well, they're already in the patterns. Okay. Let me delete this. Let me show you. Okay. Resistance, resistance. Okay. Triple top, lower low. How do I trade a hammock? See, hammocks are just price action. It's all the same. It was just a story I made up so that you remember. But I don't want you to memorize stories. I want you to remember and then just apply it in all scenarios. So how do you trade a hammock? You have a top, and then a lower low. It's a nice visual. It's anchoring. Okay, this is what I do as a coach. It's a strategy from neuro-linguistic programming. I used to manage hundreds of people, and I found back then one of my, I guess you'd say, bosses / mentors, he was big in neuro-linguistic programming, and then my next boss was big in neuro-linguistic programming. So I just happened to have a lot of NLP people in my life when I was a young executive, and so I learned from them. And when you're managing hundreds of people and you have a very short amount of time, talking intellectually, appealing to the intellectual mind doesn't have much of an impact. Talking to an emotional part of the mind or a visual part of the mind, when you only have a small amount of time, works significantly better. So I can tell you, or I can say something like hammock, and then you remember the entire story. So I can say hammock, and you think of 1,000 words. You even hear the sound, right? You remember hitting your head on the door. Why do I say that? It hurts. Climbing up the stairs, do you actually, or climbing up the ladder, do you see me? And then crank, like all of a sudden you got all this visual and sound and noise and all this is going on. And I can do it in now total recall, right? 1,000 words in 1 second. So the way you trade a hammock is you got a top, then suddenly a breakout to the downside, and you just trade the role reversal. Sweet. Easy. So you're like, Wayne, can you put that in there? It is there. That's it. There it is. That's how you trade a down channel. And you know what? If the down channel works, let's just pretend it works, because it probably will. Okay? What am I going to do next? Hammock. Now it's not a top. Okay? It's a role reversal. Okay? There could be a plan A and a plan B. You ready? I'm going to predict the future after the future has been predicted. So this is the predicted future, and then the predicted future is sell here. All day long. Okay? Coming at you like a spider monkey on Mountain Dew. Okay? Join traders.com. I am not joking. It's going to radically change everything about how you trade. You will trade like an institutional investor who used traders.com to trade institutionally. But here's the bottom line. There is no reason, except for your own rationale, your own situation. There is no reason for you to continue to trade like an amateur. That is now a choice for you. You can stop trading like an amateur and join traders.com and learn how to trade fundamentally and technically with the help of amazing tools, deep data tools, and consistent performance coaching. Or you choose not to because you don't want to, you're afraid, so maybe it's emotional, maybe it's financial, you ain't got no money, whatever. But it is a choice. Okay? You make a choice, radically change everything you do, or just keep doing what you're doing because it's fine. But there's no reason to trade like an amateur anymore. So I hope you take that message with purity, if you will, and no sort of other negative intent. Oh, he's a salesman selling me. Dude, that's you. You're roadblocking reality. So I don't know if you've been burned by 5 or 6 gurus before. Whatever, bro, but that's you. Okay, you're making that determination. This is real. This is legit. You need in on it. And if you don't have a lot of money, I'm telling you, you are going to get to the next level, even if you can only afford the base subscription. There is stuff 2 or 3 times a day in the base subscription, plus 100 hours of training, that is going to have a positive impact. This is going to have a positive impact. What most people need is pro. Okay? That's what most people need. But this is incredibly helpful. So like today, you have a meeting at 11:30 a.m. and you have a meeting at 4 p.m. So what is that? It's going to be a minimum of 3 hours today. Just that alone. 3 hours today of performance coaching. We are planning out all of next week. It's $97 a month. I mean, oh my God. Dude, seriously. Okay? Seriously. Oh my God. Cool. So, this is real. It's true. It's good. The people involved are fantastic. So peace on earth, may the pips be with you. May your profits be above average. And get yourself a good execution partner. If you don't have straight through processing, you're probably being taken advantage of. Or at least your goals are not aligned with the goals of your service provider. There's almost like a conflict of interest between you and your broker if you don't use an ECN. So anyways, peace on earth. May the pips be with you. May our profits be above average. And have a wonderful day. I hope this was helpful. Please leave a comment and please do the like. I say it, most people don't, but if you would, it would be a blessing because somehow I think, I've been told, maybe it helps with the Google algorithm. Okay? Cheers.